And now let's take a look at the latest S&P 500 overview of this morning. I'm going to take a look from the Finviz website to see how is the Standard & Poor's 500 index stocks, which are categorized by sectors and industry, and for every size here represents all the market cap. And I'm going to start with one of the biggest and major sector, which is Microsoft. As of this morning, is up by 1.13%, and we can see a lot of technology sector within S&P 500 as of this morning. A lot of them are going into increase with, we can see the green color that representing all the market cap here. Not only Microsoft with the technology is facing an increase, but also Oracle is increased by 0.27%, and Adobe is also 0.96%. And for the updates on Microsoft that blamed Delta Airlines on Tuesday for its days-long struggle to recover from a global cyber outage that led it to cancel more than 6,000 flights. And a software update last month by global cybersecurity firm CrowdStrike triggered systems problems for Microsoft customers, including many airlines. And we can see, but disruption subsided the next day at other major US carriers while persisting at Delta. Microsoft said its preliminary review suggested that Delta, unlike its competitor, apparently had not modernized its IT infrastructure. Delta, however, said it has invested billions of dollars in IT capital expenditures since 2016, in addition to the billions it spends every year in IT operating costs. And we're going to move on to one of the famous semiconductor. As of this morning, NVIDIA is also, we can see a very bright green color. This morning is up more than 3.78% as of this morning. And we also have Broadcom Incorporation is 1.29%. As for Apple, we can see here Meta is also 3.86%, and we're going to move on to Apple is down by 0.97%. For updates on Apple, is lucrative deals with Google could be under threat after a US judge ruled that the Alphabet's own search giant was operating an illegal monopoly. A potential remedy for Google to avoid antitrust actions could involve terminating the agreement, which make its search engine a default on Apple devices, Wall Street analysts said on Tuesday. And the Google pays Apple $20 billion annually, or about 36% of what it earns from search advertising made through the Safari browser for the privilege, according to Morgan Stanley analysts. And if the deal is undone, the iPhone maker could take a 4 until 6% hit to its profit, the analysts estimated. And the pact runs until at least September 2026, and Apple has the right to unilaterally extend it for another 2 years, according to media reports in May that cited a document filed by the Department of Justice in the antitrust case. And for Google updates also, we're going to see a landmark ruling on the Monday that Alphabet's Google illegally monopolizes web search also came with a rebuke for the tech giant for obscuring potential evidence in the case and a warning to other companies about safeguarding data. U.S. District Judge Amit Mehta in Washington, D.C. lambasted Google for allegedly failing to preserve internal chats and abusing protections for legal communications, but he declined to formally sanction the company. And the U.S. Justice Department had asked Mehta to punish Google for what the government called its systematic destruction of employee messages and flagrant misuse of the attorney-client privilege that shields communications with lawyers. Mehta said it was not necessary to rule on Google's evidence handling to decide whether the company violated antitrust. And that's the update within the US market. And also we can see what under the index categorized by sector and industry, which are going up and which are going down as of 7 August. And after experiencing a global market sell-off, major indexes have bounced back with notable gains, where the S&P 500 and Nasdaq ended 1% higher on Tuesday as investors jumped back into the market a day after a dramatic sell-off, with recent comments by Federal Reserve officials easing U.S. recession worries. And this recovery signals that investor confidence and resilience amidst market volatility. And to examine whether the recent gains are a temporary bounce or indicate of a longer-term trend and help us understand the underlying health of the economy. Already on the lines is Dr. Carmelo Farlito, the CEO of the Center for Market Education. I want to say, Dr. Carmelo, thank you for joining us. We want to understand, yesterday it was just on the bloodbath within the market stock, and we want to understand about the market rebound dynamics. Maybe you can help us understand what happened, especially looking at the key factors that contributed to the S&P 500 and Nasdaq rebounding with 1% after gains, the global market sell-off. We want to see, is this sustainable? Is this gain sustainable in the context of ongoing economic uncertainties? Your opinion, Doctor.
Hi, good morning, and thanks for having me. Well, I think that we have to look mainly at two factors that contributed to the recovery of Tuesday. One is probably that the investors realized that the reaction they had on Monday in front of the announcements, the contrasting announcements on interest rates coming from the United States and the Bank of Japan. So their reaction to this was probably exaggerated, that the sentiment was too extreme. And in fact, they have acted on announcements rather than actual facts and changes in the economy. This is the first factor. The second factor, I think that obviously after a big sell-off like the one that happened on Monday, prices become extremely convenient, and therefore buying on Tuesday is a good deal because they could buy at a much cheaper price. Is this sustainable in the long term? I think that we may expect a sort of stabilization and fluctuations in a more normal range, but still we have quite a period of uncertainty ahead. So we should not exclude other extreme fluctuations.
And talking about fluctuations, we're also going to take a look at the risk management and investment strategies. Firstly, definitely all the investors are adjusting their risk management strategies in light of the recent market volatility and rebound. Maybe you can share with us what are the investment opportunities and even a risk should be considered in the current economic environment.
I think that prudence is always highly recommended, that investors should look at the diversification in their portfolio. But in these specific circumstances, I would also advise two things. One, to look more in the long run, so not to be overreactive in the short run, because at least until the American elections, we are going to have extreme uncertainty. And the second point, which I would recommend, is to be extremely careful on high-tech stocks, because the period of easy money that we had during the great lockdown worldwide has somehow fueled an asset bubble, and that affected mostly the high-tech sector. And therefore, we should be extremely careful on the behavior of these kind of stocks.
And this few weeks, we can see about the recession fears and taking a look on the recession risk. How likely is a recession in light of the recent employment data? Are we on the brink of an economic crisis? As we should look on the indicators, should be closely monitored to assess the risk. What potential impact could a recession have on various sectors of the economy moving forward?
I think that an economic readjustment had to be expected at the light precisely of the period of easy money that we had during the COVID time. So during the COVID time, the measures, the expansive fiscal and monetary policies which have been implemented around the world have created an excess of liquidity in the market that contrasted with poor economic fundamentals. And this has somehow fueled investments that have been judged profitable without being profitable, and have created inflation and push now the central banks toward the correction on interest rate. So when these contrasting elements come to become unsustainable, then an economic slowdown comes. So now, if this economic slowdown will take the shapes of an actual recession or long-term economic crisis, I think is still premature to be said. But I would bet more on a general slowdown rather than a pure economic crisis like the one that we experienced in 2008, in example.
Given the recent market behavior, we also want to look at the long-term economy outlook. What are the projections for the U.S. economy in the coming months, and how might ongoing economic policies and global events shape the future performance of major indexes?
So I do believe that we are going to experience a period of uncertainty. Many factors globally are weighing in. There is to be seen what the Federal Reserve will decide, how the geopolitical tensions will evolve, how will be the outcome of American elections, and etc. So I do believe that we have to expect an economic slowdown and in general a period of economic uncertainties. At this regard, it is important that worldwide policies of confidence for businesses are implemented in order to mitigate the effects and the tensions that all these uncertainty elements create, not only in the financial markets, but also in the investment decisions that are taken in the real economy.
From Wall Street to Asia, touching on the Asian market, Asian investors are hoping that Tuesday's global recovery continues into Wednesday. However, rising US bond yields and a stronger dollar might dampen this optimism. The dramatic rebound in Japanese stocks is a key highlight. After a 12% drop, their second largest fall ever, they surged 10% the next day, marking their third largest rise on record. How crucial is the recovery in global sentiment for Asian investors, and what are the expectations for its impact on the market performance? I'm sorry, we have a balance of 2 minutes, Dr. Camillo. Maybe you can have your opinion?
Yes, sure. I think that expectations are crucial, and what happened on Monday and Tuesday really demonstrate how expectations, how the sentiment is even more crucial than actual economic facts. So how people react to announcements is extremely crucial. And we have seen how investors can be extremely volatile in their sentiment. And that's why I underscore that we need policies and announcements that direct the sentiment toward confidence in order to mitigate fluctuations. Yet, I think that we may expect quite a period dominated by quite a degree of uncertainty.